Hey, friend, welcome back. As always, I'm your host, Brian Davis, co-founder of Spark Rental, and I'm on this journey with you. I invest my personal money every month in every group real estate investment that we make in our co-investing club. And today we are breaking down how private real estate funds differ from real estate crowdfunding platforms. And to join us and help break this down for us, we have Pascal Wagner from Grow Your Cash Flow. So, Pascal, welcome and take it away.
Thanks, man. So, when I first got into the passive investing game, one of the biggest problems that I came across was how do I find deal flow? Usually, when you start, it's you maybe hear about an investment opportunity from a friend, or you get a straight email with an investment deck. And then from there, you're basically agonizing over the deal and trying to figure out, is this a good fit for me? You might then learn about these other platforms like YieldStreet, Realty Mogul, Fundrise. There's tons of them out there. I think there have to be at least 30 different kinds. And you can invest in all different types of things. There's a company out of Boulder, Colorado called Kickfurther where you can invest in inventory for certain e-commerce companies, and they'll pay you interest, and that's a way you can earn money. Or you can go to Fundrise, which focuses more on real estate related projects. And when I think about the difference between how do you decide whether you should be going on a Kickfurther or a Fundrise or even be investing in private funds, the way I think about it is that these are all a source of deal flow, and that you shouldn't, or at least I don't, sit down and say, hey, oh, I only do Fundrise deals, or I only do deals, I only do private fund deals. I think that's pigeonholing yourself in unnecessarily into working with a specific type of person. Being on the inside of the industry now, Fundrise is really pretty much the same thing as any other private fund. They're all, it's pretty much the way that they're structured. Fundrise has positioned themselves as a tech forward company, and they're trying to capture a largely unaccredited segment of the market, allowing people to invest with as little as I don't know if it's $500 or $5,000, but with
I
really
think 10
small
bucks
sums.
nowadays
Yeah.
on Fundrise.
And really, the difference, there is no big difference. Like Fundrise has a percentage management fee that they take on all assets under management, just like a private fund does as well. So I think it's not whether, hey, there are various ways in which they are different. Some of them could have different filings. Fundrise can only take on certain types of opportunities that might be less risky. If you're interested in more risky investments, you might, want to go more of the private route and work with an individual who's able to find riskier deals. But they should all be seen as deals that go through your deal flow pipeline and that you should be evaluating.
Yeah, it's one of the things that I love about real estate crowdfunding platforms is that many of them have very low minimum investments, so you can dip your toe in the water, get a sense for, how passive real estate investing works before committing to the high minimum investments of private equity real estate and, such as funds or syndications. Typically the minimum investment there is 50 grand, 100 grand, sometimes even more than that. So yeah, Fundrise is great. $10 minimum investment. Groundfloor is a particular favorite of mine. Again, a $10 minimum investment. Uh, I've invested with Concrete, which offers great liquidity, although the returns are lower. It's a trade-off you make. Arrived lets you invest $100 at a time in shares of single-family rentals. Likewise with Arc7 is another good one. So yeah, these are great platforms to just experiment a little bit with passive real estate investing, learn the ropes, and see if it's for you. So,
Yeah, one of the things I also just noticed is that with a lot of these platforms, you have to understand that to service someone who is only investing 10 or $100, the cost to the fund manager is the same whether he's dealing with one person with $100,000, or he's dealing with one person that has $10,000. It still costs the same amount of time. And so I find that that's a real cost. And I find that usually on these platforms, I'm getting a lower percentage return than I am able to find in the private world. And I think that cost is a great way to dip your toe in the water, as we're talking about dipping your toe in the water with small amounts. And then once you kind of understand how that game works, I find usually the wealthiest people that I know are not on those platforms and are all doing private deals.
That is what I have found as well. That is absolutely my experience. All right, so Pascal, in 30 seconds or less, how do you help people and how can listeners connect with you?
Yep. So I help people earn consistent monthly passive income from private placements. I had to figure out how to figure that out for myself to help me retire based on my investments in cash flowing things and not have to worry about investing my time. So you can go to growyourcashflow.io to learn more about that, or you can follow me on LinkedIn and look for Pascal Wagner.
Pascal, thank you so much for coming by. And guys, if you enjoy these quick conversations that we have, please rate, review the show. It makes a world of difference to us. And we will catch you next time.
Like the idea of diversifying into real estate, but don't want the headaches of being a landlord? Enter passive real estate syndications. You buy fractional ownership in apartment complexes and other large-scale properties. Earn your share of rental income and your share of the profits when the property sells. In fact, most of the syndicators we've invested with have averaged returns over 20% per year. You even get full tax benefits, including accelerated depreciation. Even as you collect distributions in real life, you often report a loss on your tax return. So why doesn't everyone invest in real estate syndications? First, you typically need to know the syndicator to invest, and the minimum investment for each property is high, usually $50,000 to $100,000. That's a lot of money for a single investment, which is precisely why we formed an investment club to pool funds and invest together. Every month, we propose a new deal in the co-investing club and vet it together on a group call with the syndicator. Each deal is purely optional. Pass or invest as you like. As for us, we invest our personal money alongside you in every single deal. If you want to invest like the 1% without actually being a 1%er, join Spark Rentals Co-Investing Club. Email us at support@sparkrental.com with questions, and we look forward to investing alongside you.